It is 5 a.m. at CNBC Global Headquarters, and Facebook is leading your top 5 at 5. Shares of Facebook absolutely tanking. The company reporting a big slowdown in user growth, more than $100 billion in value, wiped out. Facebook is the first of the FANG stocks to plummet. So will it take down your entire market today? Or will this keep the Dow higher? President Trump striking a new trade deal with the European Union. Qualcomm, though, pulling the plug on a proposed $44 billion buyout after China slams the door on the deal. And Shell shocks. The oil giant announcing a massive buyback as profits soar on higher oil prices. It is Thursday, July 26th, and Worldwide Exchange begins right now. All right, good morning, good afternoon, good evening. From wherever in the world that you may be watching, thanks for being with us. I am Brian Sullivan. It is a monstrously big news day today, but the big theme for your money today is going to be very simple. It is going to be Facebook versus trade, and you can see that is clearly reflected in the futures market. Here's why we say that. The Dow Jones pointing to a higher open, not a lot, but it's up 31 on the futures, mostly because those positive comments out of the White House about a possible trade deal with Europe. However, look at this. The tech-heavy NASDAQ futures, they are set to open up way lower following Facebook's big flop last night. By the way, this is the first time that we have had one of the big tech stocks truly tank like this in years. So the overall market reaction today may be very telling. Can the market hold up if one of the big tech names slides? We're going to find that out today. Keep this in mind. Right now, I mean, things could change, but right now, Facebook is set to lose more market value today than the entire market value of McDonald's, more than $120 billion just today. All right, now to that news on Facebook. Last night, shares posting their biggest drop ever after the company reported a slowdown in user growth. The three main headlines are this: weaker than expected revenues, global daily active users came in weaker than expected, much of that was in Europe, and ad revenue projections fell short of expectations. Facebook's big drop after hours, as we noted, wiping out more than $120 billion in market value. Let's bring in Cyrus Mayawala. He is head of global data investment research. Cyrus, you have been negative. You have been concerned, I should say, about Facebook on this program. You obviously had been correct. However, did you anticipate the magnitude of the market reaction to this kind of slowdown? And the company is still growing. It's just that growth is slowing.
Thanks for calling me on the show. I definitely did not anticipate the magnitude of today's correction. I expected some kind of correction, but I didn't think it would be so big. And I think what's happening here is, you know, the traditional way of modeling companies using a discounted cash flow model, it's very difficult these days because themes like regulation cannot be modeled. It's just too difficult to do it. And we think regulation is going to be the biggest theme out of the 50 themes we're looking at in 2018 and 2019 for the internet sector. And it's specifically going to be negative for social media companies, and Facebook is right at the top of that social media sector.
Does this show that Facebook stock, and by the way, Cyrus, maybe some others in technology, are priced to absolute perfection?
Well, I mean, today's drop was absolutely enormous, and a lot of people are saying that this is a massive buying opportunity, and I can see why. I mean, if you look at all the next generation tech cycles, cloud, augmented reality, virtual reality, AI, you name it, internet TV, that's a big one for Facebook. Facebook is firing at 10 out of 10 on these levels. But we think regulation is so big, and the regulation theme is really just started. There's another 12 or 24 months of this to come, and that's going to be hugely negative on Facebook. And so we have to balance these themes out. And on balance, I think there's a good chance that Facebook could bounce back. But in the longer term, there's, you know, regulators are attacking social media companies like Facebook on 8 different levels: on data privacy, on data protection, on antitrust, on tax avoidance, on the legal status of Facebook as a publisher. You know, will it be regulated as a publisher? On net neutrality, antisocial behavior of the users on Facebook, on copyright law and obstruction of justice. Does Facebook help the law enforcement authorities when they need to?
But
there's an 8-pronged attack.
True, Cyrus, but this is not a company that is contracting. I mean, the numbers would still make the majority of global companies salivate. 42% year-over-year growth in ad revenue, 42% growth for Facebook and the market reacts with right now an 18% drop in that stock.
Yeah, like I said, we were expecting a correction not as big as today. The long-term trend of Facebook is definitely up. Everything we're seeing on our thematic screen says Facebook is firing on the right themes. What we're saying is that for a transitionary period, for now, regulation is going to be specifically negative for Facebook, and it's difficult to predict what that's going to be, but we think that negativity of regulation on Facebook is going to extend, for at least another year.
You downgraded it back in April. Are you going to upgrade it now if the price falls like it is today? Does it make it a buying opportunity, Cyrus?
I think we're going to keep it downgraded on the regulatory theme. It's very high on several other themes, so we're not going to make any changes today because what happened is what we expected. The valuation, of course, has fallen, and that makes a difference. But we don't think it's a buying opportunity yet.
Cyrus Mayawala of Global Data downgraded the stock back in April. A very prescient call. Cyrus, we'll see you again soon. Thank you very much. Your other top story on this very busy Thursday is trade. President Trump and European Commission President Jean-Claude Juncker turning down the temperature on a transatlantic trade dispute. The pair suggesting they will hold off on further tariffs while working through their differences. Let's get right now to Kayla Tausche, who is live in D.C. with more. Kayla.
Good morning, Brian. The U.S. and Europe put the trade fight on hold for now, announcing yesterday that they would enter a new phase in the European-U.S. relationship and work together toward freer trade and streamlining regulations.
This is why we agreed today, first of all, to work together towards zero tariffs, zero non-tariff barriers, and zero subsidies on non-auto industrial goods.
So long as the talks are ongoing, neither side will introduce new tariffs, including on autos. But Europe won't immediately stop its retaliatory tariffs, according to President Juncker, at an event following that White House meeting. And the U.S. won't immediately roll back the metal tariffs it put in place on Europe on June 1st.
The idea that imports of steel or aluminium from your closest ally could threaten the national security of this country, and this goes against all logic and against all history. We agreed, the President and myself, to reassess this measure in due time.
So they will reassess that. But it was enough to win over President Trump, who last night tweeted a photo of him and President Juncker embracing, with a caption that said, "The U.S. and EU truly love each other." That, of course, just a week after calling the bloc a foe, Brian. Investors agree that this is good news for the market, but the fine print on this deal still needs to be worked out.
I think your point there at the end is very well taken, Kayla. I mean, the European Union last year, to your point, was a, quote, foe in certain ways, particularly with discussions around Russia. Today, they're calling them friends, and there's this lovey talk around the European Union. I guess these swings in the EU-U.S. relationship are as dramatic on your end as they seem to be.
Well, and perhaps there's been more going on behind the scenes than meets the eye. President Juncker yesterday credited the EU's trade commissioner, Cecilia Malmström, who's been meeting with lawmakers and doing some back-channel negotiations with U.S. officials for the last 2 weeks as the reason why this deal got done. But we will see exactly what it bears in the weeks and months to come. You might remember that Secretary Mnuchin back in May hailed a similar truce with China. That lasted about 3 weeks, and now that trade fight is back in full swing. Yeah, and I know you guys have been doing a lot of this work, by the way, for the Rose Garden outside. Hopefully you're building the Ark for 6 straight days of rain. Kayla Tausche, thank you. All right, we're going to hear more about this trade deal later on this morning when Treasury Secretary Steven Mnuchin joins the Squawk Box team. That is live at 8 o'clock Eastern. That is a big one. All right, so the good news in Europe may be tempered by this news from China. San Diego-based Qualcomm deciding to scrap its $44 billion planned buyout of NXP because Chinese regulators turned down the transaction. Leslie Picker joining us now with more on that story. Leslie.
It appears to be yet another casualty from this trade war, Brian. The deadline for Qualcomm to buy NXP passed at midnight Eastern time without any word from Chinese regulators on whether they're going to approve the deal. This likely shuts the door on a takeover that's been entangled in the trade dispute between the U.S. and China. Qualcomm said yesterday, it would walk away from the $44 billion acquisition unless it got last-minute reprieve. The company hasn't commented commented, but if it terminates the deal, it will pay a $2 billion breakup fee. Qualcomm needed approval from China because the country accounts for nearly 2/3 of NXP's revenue. The collapse of the deal could discourage other U.S. companies looking to buy into China's developing markets. Qualcomm CEO saying yesterday, quote, "We obviously got caught up in something that was above us." The company also said it would launch a $50 billion buyback if the NXP deal failed. Separately, Qualcomm reported better than expected third-quarter results and gave a rosy outlook on the prospects for 5G wireless technology. But it's also predicting Apple will drop its chips from the next iPhone in favor of modems from Intel. Qualcomm shares are higher in pre-market trading. You see up more than 4%, whereas NXP down a little more than 4% as well. Qualcomm CEO Steve Mollenkopf will be on Squawk on the Street today in an exclusive interview at 10:30 a.m. Eastern. Brian.
All right, Leslie, thank you very much. We'll see you soon. Big story on private equity coming up.
That's right.
All right, so much to digest overall right now. So let's try to put a bow on it, shall we? Kit Jukes is global head of foreign exchange strategy at Societe Generale, and he joins us now. Kit, I imagine you guys on your desk there are probably not even sleeping. I mean, you've got talk of a trade war in Europe. Wait a minute, now they're our friends. You got talk of a trade war with China, but President Xi and President Trump are good friends, as our president says. All these things are going on, the dollar getting stronger. How do you sort of factor this all in right now and come to any kind of a conclusion?
Look, I think you get day-to-day moves. I mean, if we look at the major exchange rates, in practice, the euro-dollar exchange rate's been between 115 and about 118.5 for about 6 weeks now, not moving very much. So we jump around and we get hit by news that we find very hard to position ahead of it. But in fact, the volatility of the big currency pairs is very low. The volatility in emerging market currencies is very high because they react, whether it's the yuan, the Turkish lira, or the Brazilian real. They react and move much more on bits of news that we can't anticipate very easily. So it's very choppy, but I don't know. The G3 currency pairs, certainly the euro has gone to the beach for a bit as far as I can see.
What's the trend, Kit? That's what we care about. Where's it going to be in 6 months to a year?
I think the euro's forming a base, setting itself go up. I think that we're not done with the trade war theme as you've been discussing. We'll get more of this coming back in a bit, but I think it's becoming clear enough that we're going to probably be able to avoid the worst in terms of what it does for the European economy. We're going to shift our focus back gradually to what are better European economic data, the slow grind towards policy normalization by the ECB. And unless the Fed springs a million surprises and sends rates up towards sort of 3.5% or much higher than people are expecting, I think I'll find the euro, having had this, it went up too fast. It's come back about half of the rally it did last year, building a base, slowly climbing its way up, and you'll probably have a slightly softer dollar by Christmas than you have now.
You think that our Fed, the Federal Reserve here in the United States, can indeed pull off this little mini magic trick, balance growth while balancing inflation, and not slow down what is right now an extremely strong U.S. economy?
I think they're going to try to. I think that what they won't make is the mistake of over-tightening too much at this point in the cycle and tipping the thing off into a sharp slowdown. So I think that their forward guidance indicating that they think neutral rates are close to 3%, which is where the bond market's anticipating them being. I think they'll stay on track to do that. And that'll continue. The noise in the economy comes from the fiscal side, not the monetary side at this point in time.
Kit Jukes, Societe Generale. Kit, it's a pleasure to get your views. Thank you very much. See you soon. All right, well, in any other news day, this Ford news might top your headlines, but very busy day today. Ford shares slumping 2% after it cut its earnings forecast. That is due to a few things, including slumping sales, its struggling business in Europe, and trade tariffs in China. Ford says ongoing plans to revamp its operations could lead to pre-tax charges of as much as $11 billion over the next 3 to 5 years. That stock is down this morning. Also in your headlines today, PayPal shares down nearly 3%. Second quarter profit beat forecasts. More people use its services, but investors reacting to guidance, which fell short of some analyst estimates. And AMD's second quarter results topping forecast, a surge in demand for PCs, boosting sales of its processors as well as graphics chips used in both computers and data centers. Maybe you can thank Fortnite as everybody needs more gaming power. All right, we are following a developing story out of China where there was an explosion outside of the United States Embassy in Beijing. Chinese police say that it was caused by a, quote, firework device. Now, only one person was injured in the blast. We're going to continue to monitor this developing story and bring you more as we get it. Some officials calling it a bomb, but you can hear that Chinese officials saying it was more like a large firework. All right, we are just getting started here on Worldwide Exchange. Coming up, a pulse check. We've got new numbers on the health of private equity. We're going to run you through them. And later on, big oil's on deck. It's a huge day for energy earnings, so we've got everything that you need to watch before the numbers hit the tape. We're back right after this.